I didn't take the full 11.8% on this because I did take profits early, but it did turn out to be a full take profit hit. And it actually would have continued considerably further had I not got out. But I'm not mad about it. It was still a good trade. And that's pretty much the whole process from start to finish.
Folks, here we are on Trading Up. We've got James Edward in the house. He's just done an amazing podcast for us. You can go and check that out with the link below the video afterwards. But for now, he's about to break down the strategy he's taught his students that have made them 14 million in funding and 4 million in prop firm payouts. So James, welcome back to the show.
Hello, you're right.
Cool. Let's share your screen and check things out. Our sponsor, Blue Guardian's the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So this trade I wanted to cover, it was from a few months ago. So it was in May. So it's not the most recent trade, but it does cover pretty much every single aspect that I would want to kind of share with you. The textbook trade, essentially, that the swing trade kind of approach would bring around. So I'll go through kind of each part of the system from start to finish. And it starts out pretty much with kind of macroeconomics, so fundamentals. So I'm not going to make it super confusing, but we are on USD JPY. Basically, I look at monetary policy. So I'm going to look at interest rate policy, whether a country is putting interest rates up, keeping them flat, bringing them down. This is going to be like a big swaying factor for how a currency moves. So in this instance, looking at USD JPY, the US dollar, just here before this kind of trade kicked off, the US raised interest rates. That makes a currency attractive because the yield is higher. And at this point as well, the Bank of Japan have negative interest rates, which is obviously not attractive because it essentially costs money to keep money in the yen. So essentially that means there's a lot of demand for the US dollar. People want the US dollar. People don't want the yen. So USD is going to go up against the yen. So that kind of built the basis for the trade, which would be, from that, a buy. So that's kind of the first thing I look at. That gives me the general overall idea as to make me understand that I'm trading in the right direction and going with the market. And then that's pretty much all of the fundamental input that we need to use. And then from here, it's just technicals. So with the kind of idea that I want to buy, we can see that on the daily and such, we are in an uptrend. If we zoom out even more, we could see that we're still in an uptrend overall, generally, on pretty much every time frame. And then we can also see that we are coming towards this kind of area here. So we had this tap, and this tap. This is what you would call a resistance, for example. But generally, because I trade with the concept of liquidity in mind, when I see a resistance which has been hit multiple times, I'm generally expecting the market to kind of attack that level again. So with the idea that the fundamentals are going to send this up, and with this point of liquidity, as we call it, I now would expect the market to go up. So what I would look to do is look for an opportunity to buy within this kind of uptrend here. So at that point, going to a lower time frame, the 4 hour, we can see the trend is up. Now, obviously, structure is one of the big things I use. That's just higher highs and higher lows, very simple. The technical stuff I do is really not too complicated. And then the other thing I consider when we're looking at this structure and when we're looking at the actual technicals is going to be market efficiency. So that's basically just imbalances, which means essentially when we open a big move in the market like this, I'm looking for it to be filled before we actually get into any trades. So we see we had a huge push up. Instead of buying anywhere on the way up here, I want to wait for this to be filled before I start looking for buys. So now we had that filled in. So the demand zone's been hit. And now I'd be expecting the market to come and trade up into here based on all the technicals and the fundamentals I just covered. And then I look for a confirmation. So a confirmation to me is just making sure that the smaller trend agrees with the bigger trend. So here we can see, obviously, we just looked, the big trend is going up. The smaller trend here, I would look at it from the lower lows and lower highs. And as you can see, we had this kind of lower low, lower high, lower low. And then after we broke this point here, we've now formed a higher high. So that for me is kind of the confirmation. That's what I need to see. Now I have fundamentals, high timeframes and low timeframes agreeing. So at this point, I would look for a demand once again to buy from. Now as I said before, look for imbalances and then supply and demand zones. So for me, I'm less interested in this area because we still have this imbalance below. So for me in this particular example, I was more so interested in looking for a buy from here. Now at this point, we can literally place a buy limit because the trade is confirmed at this point, right? We had the break in the structure. As I said, all the trends agree, the fundamentals agree. So I enter generally most trades off of buy limits or sell limits just because I'm waiting for the structure to confirm. And once that's done, I can place an order. And then targets wise, obviously we wanted to take it up over these highs. But in reality, when I took the trade, I actually cut it early at this point. So the 250 area, 137.250. Reason I did that is just because this is a supply. And the last thing I want to do is actually get a trade that wins all the way to this point, but then totally reverses on me for the sake of catching a few more pips. So I actually used that as my main target for the trade. And then my entry was set at this point just here. And then from that point, the trade is pretty much done. We have the fundamentals, the high time frames, the low time frames all agreeing. And then when the trade was moving, I did take some profits early. I took some around here because it was coming to the end of the week. As you can see, that's Friday. So I took some when we were here. And then I also took a little bit when we got to this level. So one other thing I consider as well is what I call key levels. You might have heard of them, but basically it's going to be the 0, the 250, the 500, and the 750. So you can see this is 136.250. After we didn't close over that and we started selling off, I took a bit more just in case the market decided to come all the way back down. I don't want to be missing out on the whole move. So I didn't get the full. I think this trade was around 11.8 R. Yeah, I think it was around 11.8 when I took it. So, whether the entry was a bit more refined, I didn't take the full 11.8, percent on this because I did take profits early. But it did turn out to be a full take profit hit. And it actually would have continued considerably further had I not got out. But I'm not mad about it. It was still a good trade. And that's pretty much the whole process from start to finish. Yeah.
And can I ask a couple of questions on this? So, so it almost hit the level the first time, and it sort of didn't quite get there, that point there.
Yeah.
And pushed away. I mean, at what point do you just go, okay, if this thing never came back and hit that level, at what point would you can it and go, I think it's not gonna happen?
Yeah, so this coming down actually gave me a bit more confidence in the trade because it essentially formed back on the liquidity concept thing. I don't know if you consider that or if you've had people presumably on the podcast that have showed you that. We have the kind of like equal lows. So that kind of added to the idea that we were going to get that fill. But right. In an example where it didn't work, my next entry would really be looking after a break of like this high. So once we'd really shown that we are not coming back and we've then once again made a higher high, as we'd call it in this new trend, from that point, I would then look for pullbacks on buys. So this kind of entry here with the imbalanced demand and this little bit of liquidity and stuff is quite high confidence to me. So I didn't end up messing with the entry. But yeah, that is pretty much what I would do if we did start to break above. Then at that point, sure, maybe I would miss the trade. There's always going to be more coming around, but most of the time we will get a pullback. So that's what I would do in the kind of contingency plan if we didn't get the initial entry we wanted.
And just give you another sort of hypothetical here. What if sometimes with these limit order trades, you sometimes just you miss it by like a micro pip or whatever. In that instance where it just does like almost hit the level, but just misses it and shoots off and never comes back. Is it the same kind of scenario where you go, okay, well, I'm going to wait for now that level's broken. We made a high, we'll get in again.
Yeah. So what I would do in this instance is similar, but I would kind of somewhat look at the lower time frame structure, the substructure, I'd call it. So let's say that our entry was there and it missed, and then we got this push away. Instead of having to wait for a full-on break here, I would kind of just look and say, okay, this is broken. So then maybe from this point, we could look at, like an entry at this point or something. So I definitely need to see a shift away again, because I would say, let's say we were trading here. I don't consider it missed at this point, because if we're looking at this trend, we're actually still going down. So there's no reason for me to like panic and try and get in here, because this is still totally possible. Yeah. But if we did come up to there, then I would think, okay, maybe I have missed it. But then I would just use, as I said before, the same kind of pattern I look for here, being that confirmation, which would just be then waiting for the higher low and trying to buy from the higher low. So that would be how I'd approach that if we did miss it. But yeah, fortunately, we did get it.
Brilliant. Awesome. Nice little breakdown there, folks. I think there's tons of stuff you can sink your teeth into. Thanks again for coming on, James. Now, what's the best way for traders to get hold of you?
On Telegram or YouTube, presumably links in the description for those.
Yeah, right, folks. Well, what we're going to do is put a link to the podcast and all those links in the description. It'll be the first link underneath this video. So go and click on that. You're going to find all those links in there. Thank you once again for coming on, James. Whilst you're clicking on down there, hit subscribe, like, and that notifications bell, and we'll see you in the next video. Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast.